Hi there, I'm Brad Gilbert from Traders for Traders. Now, I thought I'd spread a bit of Christmas cheer and just give you a bit of insight into where these high probability actionable trades are. Okay, these are the ones where you're going to make most money. And if you can be patient, disciplined, and controlled and wait for them, then you're really going to hit it out of the park. Now, let me explain. Now, finding the actionable high probability trades isn't rocket science. And you don't need to spend endless hours in front of your screens waiting for indicators to cross over. Okay, this is real data. Now, let me explain. Now, it's a three-step analysis process, right? There's three core components that you need to have for this to work. You need a trend, a surprise driver, and an entry level. Now, the trend, you need an instrument with clear trending direction. You need a surprise driver, which is a high-impacting economic data release where the actual result is outside the range of expectations. And last but not least, a clear and precise technical entry level. It's very important. Now, the main component, right? We're looking for surprise data, but what is that? Okay, so the expectations, that's fully priced in. What we're focusing on is the range, right? A number that is outside the range is not factored in at all. So if the number comes out outside that, you're going to see a very big move. Now, in this example, I'm using the non-farm payrolls. It's very rare that you get the three components all outside the range. But I want to emphasize the point here where these high probability trades are. If you get a number that's outside the range, the market moves very aggressively to factor that in. Okay, this is where you get the big, strong moves. So if there's economic numbers where there are more than one data release, say there's two or three, and they are outside the range, you are going to see a huge move. Now, as I said, you're going to get a big one-way move with the trend. Okay, we identify the trend here on the euro on the daily chart. Okay, it's trending down. Now, more often than not, you will be executing on the hourly chart. Now, you can always have short-term uptrends in long-term downtrends, and that's what we're looking for. In this example, we've got a support trend line. It's the perfect and precise technical entry level for us. And you can see how the currency sliced through that and moved 200 points to the downside. So just to run through that, the trend was down. The surprise driver, we got stronger numbers outside the forecast range. The entry level, we got a clear technical entry level of 106.75. And the outcome, well, it sliced straight through the trend line and moved down 200 points. Now, the good thing is this will work for any trending instruments. If you're patient enough to wait for those numbers that are outside the range on the release. To summarize, we need a trend, a surprise driver, and an entry level. Now, just before you run into this, right, it's very important. Okay, if you're looking for a positive outcome, it's very dependent on each component working together. Trading any of them in isolation will potentially limit your successful outcome. And you can further optimize your performance with more clinical execution, streamlined trade management, and aggressive capital management. Now, good luck, traders. You need patience, discipline, and control to get these right. Good luck.